Hello again, I'm Wally and I'm here to give you some year-end tax tips for your small business. These are often things that small businesses forget that they can deduct. But before I talk about the deductions, I want to talk about filing an extension. Don't be afraid. You're more likely to get audited if you file early than if you file an extension. We have IRS agents waiting for you to file early. When you file an extension or you file later, the IRS is a little busier. But always remember, every business has a chance of being audited. If I prepare your tax return, all tax returns that I prepare, 1040s, are protected by an audit protection. Let's talk about some stuff that you might forget if you own a rental property for business purposes, is travel. Travel is one area that we often forget or small businesses overlook in deducted expenses. Is your travel business related? Do you rent a car to go on business meetings? Did you take a train to attend a seminar? All of these things are deductible for business purposes. If you stayed in a hotel overnight, your food that you needed to eat when you're away from your home. Talking about meals, if you have a meal by yourself in your home state, local, close to you, under 150 miles, that meal is not deductible. But if you take a business colleague out, what used to be 50% deductible is now 100% deductible. This is our last year. They increased the deductibility for business meals to increase people going back to restaurants, which suffered horribly during COVID. So remember, business meals are 100% deductible in 2022. Do you work out of your home? Do you have an office in your home? All of the supplies for that office and home, your desk, the paper, your pens, all of these are things that are often overlooked. You want to take inventory of your home office. Anything that may have been personal and now you brought into your home office can now be deductible at its fair market value. Electronics, iPads, computers, internet, all of these things, if you have your children, and that's another deduction that people who own small businesses don't realize, you can hire your child. And if your child works for you and manages your social media, some of their electronics become deductible. Hiring your child takes some of your income out of a higher tax bracket and puts it into the child's tax bracket. And remember, everyone gets a standard deductions. So the first $12,500 for a single person is not deductible. The other benefit, if you hire your child who's under the age of 18, their income is not subject to Social Security or Medicare tax. So this takes income that you may have been charged in your self-employment tax to your child in a lower income tax bracket, and now we're not charged Social Security and Medicare. Huge savings. But remember, you have to pay your child for work that they actually do. You can't use payroll for your child as their allowance. The other savings for your child is in Pennsylvania. If you pay your child on $12,000, it is subject to Pennsylvania state tax. But if they take that $12,000 and put it into their 529 fund, now they are not subject to any Pennsylvania tax. If you pay them over $12,000 or over the standard deduction in that year, you can also contribute to their Roth IRAs or their regular IRAs, another deduction for your child. when we talk about autos, cars, and I always hear my hairdresser told me I could deduct my new car. It depends. And it all depends on the fact of how much miles do you use a car for business versus personal. So whether you take, there's two ways to deduct a vehicle. You can take the actual cost or mileage rate. So depending on what you take, you still always need mileage. So the IRS is going to ask us, what's the total mileage on the car for the year? What portion of that mileage is business? That business mileage percentage will be used for your actual expenses. That business mile percentage will you use for your mileage rate. You can only deduct the mileage rate of the business use. When you do actual expenses, especially if you lease your car, sometimes your expenses can be higher. When you use actual expenses for buying a used car, usually you make out better on the mileage rate. Again, these are just rules of thumb, and all of my information, I'm going to advise you to always seek your own personal financial advice. All of this video and all of my videos are only for information use only. The next thing we're going to talk about are self-employed retirement funds. We're all going to get old, God willing. So we want to talk about retiring. For self-employed, you can put money into a regular IRA. You can also put money into a SEP IRA, which is 25% of your net income. But you can also put even more than that if you do a 401k solo, a 401k for a small business. This will allow you to contribute more. You want to always max out your Roth IRA if you're able. Your IRA deductions, Roth IRAs are deductible in retirement. Your other IRAs deductible, and that's why we want to max out our SEP IRAs, regular IRAs, simple IRAs, solo 401ks, because those are deductible today. And rule of thumb, again, is for most people, their income is higher in the years that they are working. Income is usually reduced in retirement. So the nice part of a Roth IRA, we're deferring taxable income till Roth IRA, we are taking tax income and putting it away, and it's tax-free in retirement. Regular IRAs are tax-free, taking tax-free money today and putting it away. In retirement, it does become taxable, but that both accounts get to grow tax-free. And again, hire your children. If you have children of working age and can do reasonable tasks for your business, hiring them is a huge tax saving for small businesses. Subscribe to our channel. All of the information I'm going to give you here is just for information use. Check with your accountants. Come and see me. We'll also have a link in the description where you can schedule a half-hour appointment with me. I look forward to seeing you, and happy tax season.